Yes, indeed. Now, to speak to us further about the way ahead, Mr. Shaktikanta Das, may we request you to please address us.
Mr. Subramanian, members of the entire team ET Now, distinguished panelists and other experts who would be taking part in various discussions during the course of rest of the day, members of the audience, ladies and gentlemen. I'm extremely delighted to be here at this event with ET Now, which I think incidentally is the second event of ET Now that I am participating. The earlier one I had participated, if I recall correctly, was in December 2019. And much has happened after that. And here we are, and where ET Now completes its 15 years. So let me at the outset congratulate the entire team of ET Now for their journey over the last 15 years, which has been marked by several high points and extensive coverage of the Indian economy, the global economy, and analytical discussions and other interactions which they have participated. There was also a bit of a good news from the Reserve Bank of India, which was already mentioned by Shri Subramanian. Recently, the last week, the Reserve Bank received the Risk Manager of the Year 2024 award from Central Banking London. And over the years, particularly in the recent years, the steps that we have taken to build up internal risk management skills within RBI, to, the risk management within RBI, it's a true recognition of that, and the citation clearly recognizes that RBI has now reached a certain high point of all the leading international institutions, particularly the financial institutions and central banks. Now, this is my first public interaction after the monetary policy statement, which I made on 7th of this month. That's about, 10 days from now. And so therefore, the silent period is over. And I would like to take off from where we left in the monetary policy and try and provide a little bit of further elaboration on the rationale behind the various decisions that we have taken in this latest monetary policy of June. Much was said about the economic growth of India, the GDP growth of India. As you are all aware, last year, 23-24, when we started, the RBI's projection was 6.5% GDP growth for 23-24. The markets and the analysts were pitching a little bit lower, and we were considered as being on the optimistic side. But we continued our journey of optimism because there was enough basis to it, and then we increased it to 7%. The market also revised upwards. The analysts also recognized the trends which were building up, and soon, others also revised their GDP projections upwards. And when we said 7%, it was also perceived as optimistic. Then I think somewhere during the course of the year, earlier perhaps in January or February, I remember having said in a public forum that we will not be surprised if the GDP growth touches 8%. And indeed, it not only touched 8%, but has exceeded 8%. 8.2 is what has come out. If you look at the average of the last 3 years, the average is 8.3%. The average annual GDP growth over the last 3 years is 8.3%. For the current year also, that is 24-25, we have given a projection of 7.2%, and the earlier projection was 7%. Now, I don't want to get into too much of statistics because, statistics has its own, two sides to statistics. But let me say why we increased the growth. Why did we increase by 20 basis points? Now, that is because, number one, we see the growth momentum. We see a very strong momentum of economic activities, a strong momentum of growth. If you look at the last quarter, that is Q4 of 23-24, that is January to March this year, the momentum of economic activity is much stronger. In fact, it was perhaps the strongest momentum of the last year. And the growth in the last quarter itself was 7.6%. Although the implicit number behind NSO's number was 5.9%, but the momentum was so strong that it came at 7.6%, resulting in the high growth of last year. And that same strong momentum of economic activity has also continued into the first quarter of this year. April and May are over. We have in Reserve Bank, we have the data for it. June also, we are in the third week of June now. The data is also available with us. So we see the momentum is well sustained. And we are therefore quite sanguine and quite optimistic that the projection which we have given for the first quarter of this year, 7.3%, we are quite optimistic that it will indeed be 7.3%. And there is no reason why the momentum will slow down. That's the first point. So the momentum of economic activity continues to be strong. The second point, there are several other points, I will not go into the details, but the second point I would like to highlight is that rural demand, in the consumption side, rural demand which was lagging behind for considerable period of time since the COVID, and perhaps in the first half of last year also, has also beginning to improve and improve quite visibly. The rural demand, rural consumption has picked up, it has gone up. FMCG sales in the rural sector has also increased. The demand for NREGA labor has also gone down. The agricultural season also looks very optimistic because of the projections of above normal monsoon, southwest monsoon this year. So therefore, rural demand is something which is picking up, which was not there earlier, and all our analysis, all the trends which have come to us, it indicate that the rural demand will hold. And as the government capex starts unfolding, as the expenditure from the government side as well as from the private investment, they start picking up, I think rural demand this year will be well sustained. The third point is that the external sector, notwithstanding that the global growth is still below its historical average. In fact, from 2000 to 2019, the average annual global growth, the trend growth, GDP growth was about 3.8%. But the IMF has projected 3.2% for current year as well as 3.2% for next year. Now, notwithstanding the fact that the global growth is below the historical trend, but still 3.2% means that the external sector, the external demand will also continue to be strong. And that would mean that it will give a lot of support to our exports, especially the services exports. In fact, services exports of India are doing very well, especially, IT services and other services. It's no more confined to just IT, but it's now business services, it is accountancy, it is legal, it is so many other activities in the, in the realm of services where India is, where things are looking up so far as the external demand is concerned for Indian services sector. So therefore, it's the momentum of economic activity, number one. Number two, rural demand is picking up. Number three, the external sector also offers a lot of promise for the Indian economy. Add to that the fact that the urban demand is also holding on, mainly supported by increased activity in the services sector. Add to that the good monsoon which is expected. Add to that the revival of investment which is also happening. Private investment. When I'm saying private investment, I'm specifically referring, when I'm saying investment, I'm specifically referring to private investment. Government capex has been very strong in the last 2 to 3 years. But private investment is now picking up. If you look at the corporate results which have come out for the last year, you will find that, the size and the numbers relating to fixed assets have gone up. Earlier, corporates, because of their deleveraged balance sheets, the corporates were holding lot of cash, lot of surplus cash they were holding. But now it has moved into fixed assets. So if you look at the balance sheets of corporates, the size of the fixed assets have also grown, and they have shown very good growth. Now that is one evidence that investment, private investment is taking place. You will hear several bankers subsequently during today. They will highlight perhaps even better the demand that the banks are experiencing from the corporate sector, and there is clear visibility of investment happening in certain key sectors of the economy, mainly related to infrastructure activities, whether it is steel or cement and other areas like electronics, chemicals and fertilizers, pharmaceuticals, oil and gas. So all these sectors, basically primarily infrastructure sectors and also electronics and certain capital goods. Capital goods imports have also, electronic goods and capital good imports are also looking up, which means that that is going into more of productive activity. So because taking all these things into account, we have therefore increased our growth rate to 7.2%. Now turning to inflation, inflation is moderating, but at a very slow pace. We are fairly confident that the downward journey of inflation will continue. We are pretty optimistic that the inflation will continue to moderate, but the pace of moderation seems to be very, very slow. And it is so worldwide. If you look at the numbers, even in advanced economies, the pace of disinflation is very slow. In the advanced economies also, we are coming across instances where inflation has again mildly gone up, and or rather it has kept higher than what was estimated. So therefore, this last mile of the disinflation journey is proving to be very sticky, arduous, and very slow. That requires a lot of patience, and we need to be watchful. But we are quite confident about inflation moderating to 4%. How long it will take? We have given out a path in our monetary policy statement and also in the monetary policy report, which we come out every 6 months. So for the time being, we are sticking to that because there are lots of uncertainties also. And the uncertainties come from the fact that the challenges of food inflation still remain. Food inflation continues to be high. In fact, in the last 6 to 7 months, the average food inflation is about 8%. Core inflation has substantially moderated and has reached a historical low of 3%. That was the number for May. In May, the core inflation was 3%, whereas food inflation was 7.9%. So the disinflation process is getting a lot of resistance from the food inflation remaining stubborn and remaining very high, and that's primarily because of supply side factors which are affected by the weather conditions. The extreme heat last summer has affected the pulses cultivation. It has affected the vegetable production. So therefore, there are challenges in the journey for disinflation, and we need to be very mindful of that. International metal prices have also started going up, of late. So taking into all these factors, we have given our projection that current year's average inflation will be 4.5%. Inflation will continue. These are our projections. Inflation will continue to moderate, but will continue at a slow pace. So therefore, at the current juncture, we thought it's most appropriate to avoid any kind of adventurism and stick to the path of inflation that we had earlier laid out. And as a central bank, we will remain very watchful and determine our actions as we go forward. Having said that, let me say that the growth inflation dynamics in India is very well placed. There is enough room, considering the fact that inflation is moderating, there is enough room for us to sort of focus clearly on inflation. There is also enough room for economic growth to pick up. Whatever moderation in inflation we have achieved thanks to the 250 basis points rate cut, and thanks to the actively disinflationary stance that we have taken since the beginning of 2022-23, that is since April 2022, immediately after the commencement of the war in Ukraine, and the monetary tightening that we did, which was mostly done upfront, which was front-loaded. Because of that, the core inflation has come down, and we have been able to achieve that without sacrifice in growth. So therefore, I am very happy to share with you that the balance we are expected to maintain between inflation and growth, which is enshrined into the relevant provision in the Reserve Bank of India Act, when it talks about monetary policy framework, we have adhered to that balance, which is the expectation of the lawmakers as embodied in the Reserve Bank of India Act. Finally, before I conclude, let me say that not only the domestic sector, the external sector, I mentioned about export demand and other potential, but in the external sector, two important things are happening. Number one, our current account deficit has remained very low. In fact, compared to very high numbers in the past years, let me not go into the details of the numbers, but in the first 3 quarters of 23-24, that means from April 23 to December 23, the current account deficit was 1.2%. Our teams are working on the fourth quarter numbers. The fourth quarter numbers look to be even lower. And when you look at the annual current account deficit number, I will not be surprised next week when we publish the current account deficit numbers for this year. It could be even lower than 1%. So the current account deficit looks very promising, and the reserves have reached, you would have seen the latest number, the reserves have reached 655.8 billion US dollars. The forex reserves have reached $655.8 billion. So that gives a lot of confidence to international investors about the stability of Indian markets. And we will continue to build up reserves opportunistically whenever there is an opportunity. I have said it earlier also, it's a matter of stated policy. We don't shy away from that. We will continue to build up our reserves opportunistically whenever there is an opportunity, whenever the market allows it, so that a strong reserves also does help us to maintain the volatility in the markets and also give that confidence to international investors that India will be able to fulfill its external payment obligations. Finally, let me conclude by saying that as a central bank, you are aware the Reserve Bank has got a wide range of functions. It's what they call a full-service central bank. Few central banks in the world have that kind of range of activities, starting from payment systems to financial inclusion, to monetary policy, to regulation of banking, supervision of banking and non-banking sector. So a whole range of activities we have, and our primary responsibility is to ensure financial stability. And as an institution, Reserve Bank remains committed to maintain financial stability in the country and remain future ready for the growing economy that India is and which India promises to be also in the future. We have spelled out some action plan as a part of the agenda for RBI at 100, and which was released along with the monetary policy statement on 7th of June. So with this, let me conclude, and thank you very much for your patient hearing. Thank you.
When the words come from Governor Das, the confidence, the kind of reassurance that we get is beyond measure, and it's great to continue this conversation with Editor-in-Chief of ET Now and ET Now Swadesh, Nikunj Dalmia. Let's have more leadership conversations going. Over to you, Nikunj.
Good evening, everyone, and thank you for being part of ET Now Dialogues. 15 years, well, it means a lot, and ET Now as a brand would have not reached where it is without some of you really supporting us, so thank you very much. Governor, all I can say All I can say, sir, is a big thank you. A big thank you on behalf of everyone in this room, those who are watching the telecast live, and those who would be watching the show later on. It is an absolute honor and a pleasure for us to have you here. Governor, your opening remarks, in a sense, really set the tone. The economy is growing. Inflation is coming under control. Under your leadership, Reserve Bank of India has ensured that the financial stability remains strong and robust. And forex reserves are strong. So can I say that this is the best macro setup you've seen, at least in your tenure?
Yeah, I would think so. It's, the mix, the confluence of various factors are very robust. But having said that, I would like to also qualify it by saying that should not lead us into any kind of complacency or overconfidence. Markets keep changing. International developments keep happening. There could be surprises. So one has to be very alert and agile at all times and try to sort of watch the developments in every corner of, every corner of our own economy and also what's happening all around. Because things can sort of turn, it takes very little time for the cycle to change. So one needs to be very alert and agile. No room for complacency, but yes, at the same time, I think the current confluence of factors are strongly favorable to India's growth and stability.
Governor, your FY24 estimates, which Reserve Bank of India initially started with, the final number was much above than what your initial estimates were. So for FY25 also, the initial start number is 7.5, 7.2 to be specific. Are you leaving a lot of headroom for a positive surprise?
There can be positive surprises. I don't rule it out. But I think, we give a number when we are totally convinced about it. And our approach is not to sort of gamble by giving a higher number. Our overall approach as a central bank is always very conservative in the sense that when we are absolutely sure about a particular number, we give it. Now we are certain about 7.2%. Of course, yes, there are downsides emanating from possible downside risks, not downsides, but downside risks emanating from geopolitical conflicts, accentuating further, or, the trade and the capital flow fragmentations becoming more accentuated. So there are downside risks emanating from the external sector. But within that, as I explained a little earlier in my address, in my opening remarks, I think the momentum continues to be strong. So we therefore thought that 7.2% is very much achievable. Even in the first quarter, let me say that 7.3%, I said it should be possible. We expect it very much to materialize. Although our internal nowcasting tells me a slightly higher number. But I'm not saying that in public. I would rather wait for the number to come and then talk about it.
So, Governor, when the Reserve Bank of India governor is indicating something, he's thought through it. And now I'm just putting the dots here, which is then your earlier forecast, while you were describing the forecast, your choice of words was cautiously optimistic. The word cautiously optimistic is out. The word confidence has made a comeback.
Yeah, I think we are getting used to a better forecasting scenario. And I hope it sustains because whether in matters of inflation, again touch wood, whether in matters of inflation or growth forecast, you would have seen in the last few years, by and large, the numbers are coming almost in line with our projections. So our forecasting models, our overall, methods, we have brought about a lot of improvements. So that seems to be working. And we are quite confident about this 7.2 for the current year.
Governor, last couple of years, we've had a patchy monsoon. The economy has managed to grow despite a patchy monsoon. Looks like we are in for a normal monsoon this year. So yeah, assumptions of your GDP growth, what kind of monsoon factor it is accounting in for?
No, if you see the monetary policy resolution, I don't know whether we mentioned, I think we did mention that we assume always a normal monsoon. Because monsoon, again, the uncertainty always persists. Even this year also, after setting in a bit early, For the last 15-20 days, monsoon has slightly slowed down, and currently there is extremely severe heat conditions prevailing in northern states. But the monsoon IMD. But for the projections, for our estimate of GDP growth, and in all respects in monetary policy, we have assumed a normal monsoon.
Governor, this is the first time we are speaking to you in a public forum. So purely from a regulator standpoint, the continuity of the government, what does that mean for a regulator?
You see, for us, it is the government. There is always a government. Irrespective of which party forms the government, there is always a government. So as a central bank, and for every citizen in the country, there is always a government. So I'll leave it at that.
Sir, everybody expects you to leave it at that. Everybody expects you to leave it that only.
So
Not
it
say
is on
anything beyond
expected
that.
lines, no? So I have I have played the shot which you expected.
So, Governor, since we are talking about shots, let's look at the pitch report. Global conditions are stable. If one looks at the weather conditions locally also are getting better. So is the stage now getting ready for Reserve Bank of India to do the obvious, which is you've stated that you want to do the obvious, change the stance?
This is one point which we have explained quite a lot in the monetary policy statement. Now, you see, we are maintaining the growth inflation balance. And in that growth inflation balance, the interest rates, the repo rate is 6.5%. And it seems to be working because growth continues to remain robust. But inflation is moderating very, very slowly. So if you are expecting a faster moderation of inflation, then we have to take much more drastic measures. In terms of stance, in terms of rate, we'll have to take a much more drastic measure if we want inflation to be brought down. But then we have to also weigh what would be the growth sacrifice that we would be making for the economy. In fact, if you recall, towards the end of 2021 and early 2022, there was all-round clamor as to why the Reserve Bank is not increasing the rates. Before March of 2022, there was a considerable body of opinion outside saying that the Reserve Bank was falling behind the curve. And that view seemed to be gaining traction. But we were very single-minded that we have taken the right decision, and at that point of time, towards the end of financial year 21-22, that is, let's say, from about October to, or rather from December 22 to December 21 to just in the 4-5 months preceding the Ukraine war, we wanted growth to revive. We wanted clear evidence that the growth has revived. So therefore, we refrained from increasing the rates or tightening the stance. Because our job is to ensure a proper, appropriate balancing between growth and inflation. At this point of time, there is again a clamor that, one should change the stance. But we want clear evidence that inflation should moderate. And moderate, we need more evidence that inflation should moderate and perhaps a little faster. As I explained, core inflation has come down, but the biggest uncertainty is food inflation. The average food inflation has been 8% in the last 6 to 7 months. And that is slowing down the disinflation of the headline numbers. Headline still remains at 4.75 as per the latest number. And then in the second quarter, it is likely to go down to 3.8. But again, it will go up to 4.5, 4.6. So you are within striking distance of 5%. And if there are a series of weather events or something goes wrong on the weather front, the vegetable prices and other prices of the key vegetables, the prices may go up. The food inflation again may go up. International food prices, I talked about international metal prices going up. In fact, the global food price index has also started going up. So therefore, it could even touch 5%. So therefore, it will be too premature to talk in terms of changing the stance I think I used the word saying that any form of adventurism should be shunned. At this point of time, we should avoid any form of adventurism. It's better to stay the course and be watchful and take the step as play ball by ball.
So in your terminology, the inflation elephant has gone for a walk. It's too early to assume that it's gone in a hibernation.
You see, the elephant is definitely going towards the forest.
Okay.
No doubt on that. But it's taking its own time. So we have to be cautious and watchful.
Okay. Governor, the dividend from RBI, 2 lakh crore, is it in sync with Reserve Bank of India's balance sheet, which is getting expanded, Governor?
You see, the balance sheet size obviously is growing by about 10% or so annually. But this year, you look at the annual accounts, they have been already published. It's there in our annual report. The annual statement of accounts have already been published. And it's mainly our incomes from foreign assets have gone up. Significantly, the income from foreign assets have gone up. That is mainly decided by the fact that all the advanced countries or all the countries where we have deployed our forex reserves by investing in their securities and government securities and treasury bills, the interest rates have gone up there. So naturally, in all our investments, we rotate our investments also quite frequently. So naturally, the income from foreign assets have gone up significantly, and it is determined. It's just a arithmetical number that we have to arrive at, following the principles laid down by the Committee on Economic Capital Framework, the Bimal Jalan Committee. According to that recommendation, it is mainly out of, I would say, the foreign assets income.
Governor, Reserve Bank of India's primary goal is to maintain financial stability. But I'd like to draw your attention to the financial markets. The financial market cap right now is at 5 trillion. The real economy is at 4 trillion, which means the financial economy is now higher than the real economy. What do you make of this big expansion in the financial economy? As a regulator, we want to hear your thoughts.
No, you cannot sort of draw a conclusion from these numbers, from the headline numbers of nominal GDP and the financial market. You cannot draw a conclusion. There are much more to it. There are much more nuances to it. But all the parameters and indicators of our economic, of our Indian economy and our financial sector, they at the moment look very stable. What you are perhaps implying is that the question that is some part of the market or some segment of the market, is it getting overheated? So that is, I think, to put it, plainly, I think that is the question which you are asking. I think SEBI is engaged with that. So let me not, intrude into SEBI's territory and start talking about the stock markets. I think SEBI is fully seized of what's happening in the markets, and we have our regular interactions with the SEBI as a part of the financial stability and development, FSDC, the Financial Stability and Development Council. We have also a subcommittee which is chaired by the governor. The chairperson SEBI is a member of that. Under the edges of that, we have an early warning group which meets from time to time and discuss everything that's happening in the financial markets. And if there is anything which is of discomfort, the early warning group addresses that and brings it to our notice. So far as we are concerned, that is how we deal with it. At the moment, so far as stock markets are concerned, let me leave it to SEBI to talk about it. Other signs, wherever we feel we have our views on the markets, which may not necessarily fall in our domain, we share our thoughts with the SEBI.
What about the activity or retail frenzy in the futures and the options market? Given that futures and the options market indirectly could have impact on retail balance sheets, are you monitoring that?
Yeah, the early warning group is monitoring that. SEBI and the Reserve Bank together, we are monitoring that. In fact, currently the options and futures, the volumes are pretty large. It's, I think you're probably referring to that. It's perhaps larger than the nominal GDP of the country. So we have discussed these matters with SEBI. SEBI, I think, has taken a few measures, and they are examining it, and I think they will deal with it.
In the past, Reserve Bank of India has taken proactive measures when they thought that there was a bubble in the real estate sector. The economy is growing and the real estate sector is also growing. What are your thoughts there in terms of the expansion which is happening in the real estate sector? This is something Reserve Bank of India in the past has acted on.
You see, we are watching the developments in all segments of the credit market. Last year in November, we took certain action against unsecured loans, not against unsecured loans, but in that particular sector. Unsecured loans, then things like bank lending to NBFCs. So wherever we saw some signs of a possible stress coming, in fact, at that point of time when we took the measures, there was nothing happening really, there was nothing alarming. But our conclusion was that if we leave it as it is, if we leave it unattended, or if we leave it as it is, then it could have led to a possible crisis at a future date. So we acted preemptively. And you would have seen that, in fact, the numbers speak for themselves. The retail lending, the unsecured retail lending, the other personal loans, what they call it in banking terminology, or the credit card outstandings, or for that matter, the bank lending to NBFCs, they have all moderated. They have all moderated, and we wanted a certain level of due diligence and discipline to be brought into the system, and that has been brought in. So we are watching all these segments of even the real estate sector, including housing. We are monitoring it. The numbers at times may look very high because, you see, SDFC merger took place last year. So that was not a part of the banking sector assets. That was a part of the NBFC. It was a housing finance institution. The SDFC was a housing finance institution, so that got merged with the SDFC bank. So therefore, because of the impact of the merger, the growth in the, what you call the real estate sector or housing sector may look high. But if you net it out, net of the impact of SDFC merger, the growth is within, nothing to worry about. But we are monitoring it nonetheless. And a major difference between what is happening in the, now in the real estate or the housing sector in particular, and the position which prevailed, let us say, more than about 10 years ago, is that now you have a RERA. So the RERA is now regulating particularly the housing sector. So the kind of asset bubble which we saw earlier in the housing sector, the paradigm has changed. And from Reserve Bank, we are monitoring it very, very closely, very, very intensively. And at the moment, it is all right. If at some point of time, some action becomes necessary, not just in the real estate sector, but any other sector, the Reserve Bank will definitely act proactively.
In your keynote address, Governor, you mentioned that you would continue to buffer up the Forex Reserve. The Forex Reserve of India north of $600 billion. Growth is strong. CAD is coming under control. So is there a threshold beyond which you would say that you could order adequate Forex reserves?
No, we don't have any such particular number in mind. India is a growing economy, and some people like to see the Forex reserves as a percentage of GDP. I mean, it cannot be looked at in that way, because when your GDP is growing, naturally your export earning by many companies are also going up. Companies are also taking care of their own Forex management. We don't have any specific number that this will be our Forex reserves and then stop, because the economy is growing. Financial activities are growing. And we would like our Forex reserves to become even stronger. And today, I think India is, I think probably the fourth or the fifth, largest reserves that we have. I think it's the fourth or fifth largest reserves that any country, among the countries. So we would like to keep on building it.
Governor, the Reserve Bank of India gold reserve now are north of 800 tons. And according to RBI's balance sheet, the last year addition was about 27 tons. Progressively, would you be increasing the component of gold in the Forex reserve? Because globally also there seems to be a tilt by central bankers away from treasury towards gold.
You see, the gold purchase by the Reserve Bank, in fact, had stopped for quite some time. In 2011, I think 200 tons were acquired from the IMF. It's all in public domain. I'm not revealing any secret, any state secret. I think 200 tons were acquired from the IMF in 2011. But after that, RBI was not acquiring the gold. Then in December 2018, some small quantity of gold was purchased. But after that, if you see annually, and it's all there in the half-yearly reports. So after that, if you see annually, we have been buying gold. That is because our priority is to diversify the deployment of our forex reserves in more currencies and in different kind of assets, particularly gold. And if you look at the long-term price of gold, gold prices in the long run have always increased. They might have fallen in between, but in a long period average, if you see, the gold prices have invariably gone up. So therefore, gold is considered therefore as a kind of a permanent hedge that you can have against external uncertainties and challenges. So therefore, we have now, we do buy the gold. But we naturally, buy it whenever there is an opportune moment. And there is a high-level committee which decides the strategy of purchase of gold. Yes, building up gold reserves is a part of our reserve deployment, and we will continue with that. But it's not as if that we will go on mindlessly buying gold. We have to be also very mindful of the international prices. But approach is, yes, we need to sort of diversify the deployment of our forex reserves. And
we are in 2024. 6 years from now, if you're engaging in a similar conversation, a similar forum, what are the 3 big marquee changes which the regulator feels will happen in the Indian financial sector?
You see, 6 years from now, I'll be sitting somewhere there. So, but on a more serious note, we have laid down the agenda for RBI at 100, which is a part of our, the monetary policy statement, which we made. When we celebrated our RBI, the 100th year of Reserve Bank on 1st of April, where the Prime Minister also he addressed the entire gathering. After that, we have worked and we have come out with this agenda for RBI at 100. Reserve Bank as an institution needs to be future ready. And we have spelt out several steps, I think about 9 or 10 different areas where we have spelt out what kind of steps. This is not a, this is a dynamic document. It cannot be a static document because the world is changing and changing fast. So you cannot just decide your action plan for 10 years and just stick to that. You have to constantly update it and modify that. And modify meaning upgrade that from time to time. Supplement that as may be necessary. But yes, we would like Reserve Bank, as we have said in that document, we would like Reserve Bank to be a model central bank, especially for the global south. We would like Reserve Bank as a central bank which has consistently maintained financial stability and has ensured a conducive ecosystem for the overall economy to grow.
Governor, in our interaction in 2021, I'm just going to quote your remarks here. You said that the Indian fintech is like a Ferrari. What Indian financial sector needs is a small car. How do you see fintech now moving, given that Reserve Bank of India, they are not against innovation, but I guess the regulation part is coming back in fintech. That's the impression everyone has.
No, just a slight correction. I never said a small car. I didn't say that India is for a small car. No, we have bigger ambitions. We would like Ferraris. We would like other, modern varieties also to be on the road. All that I said is that you cannot have a very advanced Ferrari-like car and say that I will drive at my own sweet will. I will not follow any traffic rules. Even if you have a Ferrari, when you are driving on a road, there is a traffic and you have to follow the traffic rules. And as the regulator, it's our responsibility to ensure that there are appropriate traffic rules there are appropriate regulatory guidelines which will have to be which will have to be introduced. You cannot say that I have a great innovation and I can do anything that I wish in the market. Similar to, somebody having a very high-speed car driving at a reckless speed and in the process killing somebody else, some third party standing on the pavement. You cannot do that. There are elderly people on the road. There are children on the road. There are people walking in the pavement. There are cyclists. There are scooterists, there are auto rickshaws. So you are traveling in a road and the road is a public space. So you have to follow the traffic rules. But yes, you can have a big car, you can have a Ferrari, by all means have a Ferrari, by all means grow big, and you must grow big, but follow the rules of the game. That is our philosophy, and we would provide, our effort is to provide a set of rules of the game wherein the various fintech sector players, they have sufficient space to play, bring in innovation, create jobs, and provide necessary impetus to growth. That is very important. In fact, we have come out with we have now called for applications for recognition as a self-regulatory organization for the fintech sector in particular. We are going to call for applications for the, SRO, that is for, the self-regulatory organization for the NBFCs shortly. But we have already called for applications for having having an SRO for the fintech sector. And last year when I participated in the Global Fintech Festival, I think that was in September or October, I had said that by next GFF, which incidentally this year is in end of August, I had said that I would like to see one fintech SRO at least having taken shape. And from our side, we are working towards that. I hope, and I'm quite optimistic, that the fintech sector will also soon come together, form an SRO, make the application, get the recognition from the Reserve Bank, and start working, because SRO is very important. It provides a kind of interface between us and the market and the players. They tell us what all developments are taking place in the market, what all new technologies are coming. We in turn sort of address their concerns, take their concerns and suggestions into account. So it's a kind of a platform which provides an interface. So therefore we are all for innovation, but we would like to have responsible innovation and innovation becoming fintechs to follow the rules of the game.
Governor, last three questions, I'll not extend my appointment. Last three questions, I'll not extend my appointment beyond that. Again, a big picture question, which is that who do you think in the financial sector has the right to win? Big banks, innovative banks, who has the right to win in the financial sector in India?
I think that the market has to decide who has the right. You can't say who has the right to win, but that the market will decide. And that also the individual institutions, how they play, what kind of governance they have, what kind of management systems they have, it is their responsibility. As a regulator, we have no preference. We do not discriminate between a bank of, a bank of this type or a bank of that type. It's for the managements of individual banks to, do their best to have their own growth ambitions and take all necessary measures for fulfillment of their growth ambitions within, of course, the broad parameter of the regulatory guidelines. And our job is to provide a vibrant and a robust ecosystem where everybody grows.
Final two questions, Governor. Is it true that your day starts with Economic Times and it ends with ET Now?
My day starts with multiple newspapers. Now, whether it is Economic Times or some other paper, I think let's leave it at that. But yes, definitely Economic Times is one of those multiple papers. And during the day, the channel remains, some business channel is always on my, in the office on a silent mode, of course. But I keep shuffling the channels. And one of the channels is certainly ET Now.
Thank you, Governor. But that was not my last question. My last question, is everyone ready? No, Queen. So last question, Governor, to you is that if given an option or choice to continue as RBI Governor in the third term, would you be ready to accept it?
Well, that's a very, very hypothetical question. And why sort of, I still have 6 months' time, so let's see.
If you hear in next 3 months, what would be your first answer? If you hear something, what would be your first answer from the government that, okay, you know, they would like you to serve as the third government? Are you inclined towards it?
You see, I always use the analogy of cricket. When you go out to bat, you don't go with a preset mind that I'm going to play this shot. You wait for the ball to come. When the ball, from the action of the bowler, you see some movement. You make an assessment that this is how he is going to bowl. But these days the bowlers are far too intelligent. They will show one action but bowl in the opposite direction. So you have to be watchful. The ball has to pitch. Then you have to see in which direction the ball is taking the turn. You have to see whether it's a bouncer, a yorker, or it's, what's the nature of the ball. And then you have to play your shot. So therefore, a batsman cannot decide what shot he is going to play before the ball has pitched or before, if it's a full toss, before it has pitched.
Ladies and gentlemen, if a pantheon of great central governors in the world is ever to be made, all I can say is that the RBI governors, Mr. Shaktikanta's name would be right up at the pedestal. From COVID crisis to managing the economy to ensuring that the Indian banking system remains robust, I guess all of us really are very grateful, thankful to the way Reserve Bank of India has really ensured that the financial stability of the system remains ensured. I would urge everyone to give him a standing ovation. He is someone who has really ensured that India goes through tough times, through peaks and troughs. Reserve Bank of India has ensured that the Indian financial system remains robust. Thank you, Governor.